And it's 1:30 p.m. on the final trading day of this year, 2023. Just before we get into 2024, let's give you the last dose on Business Incorporated. Here's what's coming up on the program today. Kenya inflation is still rising, but at a slow pace. We'll take a look at some prices of staple food in Nigeria. A lot of increase has happened, I tell you. And from January, winners in lottery in Ghana will be paying 10% tax, withholding tax. Good afternoon, I'm Ini John Mekwa. This is the final one for the year, so let's get right into it with the market. Beginning with Nigeria, unfortunately, a slight profit taking happened on the market. But that doesn't mean that that's the way it will close. Well, the market is closed by now. We hope to get our analysts to give us real-time market numbers right there from the NGX. And so we can, looking at the number now, 0.01% in the red. In South Africa, it's up 0.53% at 76,893.15. Well, looks like Nigeria hit 74,000. That's where South Africa used to be, and South Africa has moved to 76,000. We are up for running for the money right there. Other parts of Africa, we see that the EGX is closed. That's Egypt, but closed positive 1.40% at 24,691.43. Kenya is also in the green, closed in the green, 0.49% at 91.68. And now let's go to the Middle East and see what's happening with those markets. Positive sentiment we see right there with the Middle East. Abu Dhabi 0.08% in the green, 9,572.07. Dubai also positive 0.14%, 4,055.09. Other region right there, Saudi Arabia also closed negative 0.36%, and Qatar closed positive more than 0.5% at 0.56%. So we're supposed to go back to the NGX to see how that market closed. I don't know if we have that. Anete sent in some visuals to tell us how the market closed. We hope to see that visual before this program ends. But first, let's talk to Afolabi Benro, a trader with Stanbic IBTC Stockbrokers, to give us those closing numbers. Please tell me it's not in the red. Hi, Afolabi. Good afternoon. Compliments of the season.
Any compliments of the season to you. Thank you so much for having me. Good
to have you. So we saw that when we took the numbers, it was at about 11:30-12. We saw it down 0.01%, marginal, excusable. But what's the market? How did it close? Because we know the market closed at 12:30 today.
Yeah, so it actually closed in a positive, thankfully. It was a good way for the year to end in terms of trading. We saw some last-minute activities in the banking names. The likes of GTCO was lifted towards the close, although it moderated back towards just before the market closed. But generally, the market closed in a positive region today. Activities were very quiet, though, outside of maybe the likes of Geregu. We traded quite a decent amount of shares. The rest of it was pretty much driven by banks, but we still closed in a positive.
Do we know the drivers of this positive sentiment?
So it's mostly been local investors that have been driving activities, especially this year. If you look at the year as a whole, I think there's the general expectation that for next year things will begin to improve, and so we saw some investors basically start to take positions ahead of those expectations.
How true is the perspective that what the surge we've seen in the market going from its 50,000 to 70,000 in 1 year, that it's because local investors are taking position, the expectation that foreign investors will come back?
I think you can't discount that. I think there's also been a lot of positive triggers in the year 2023. Post the elections, the policies that came up, the removal of the forced subsidies. So a lot of these things caused investors to react positively. Performance from international investors has reduced. If you look at stats from the Nigerian Exchange Limited, you see that it's reduced significantly. And because it's at these kind of lows, the expectation that by the time foreign investors start to come back into the market, we'll continue to see the market run. I think there's some validity to that.
But I mean, we remember the dangers of having majority of investors being foreign. I mean, it's at the smell of danger. It's portfolio investments anyways, and they're up. And then we see the market crash. Is there a way to protect investors or the market against such?
If you look at it, I think this year has shown us that local investors can actually drive the market. And that's exactly what has happened this year. I don't remember us having this kind of positive, strong performance in the market in 1 year, basically driven by local investors mostly. So I think just looking at the way the market has performed this year, I think it's safe to say that local investors actually do have the strength to actually drive performance of the market.
All right, Afolabi Benro, thank you so much for giving us that real-time information from the market. And thank God the market closed positive. A good way to end the year.
Yes, indeed.
All right. Yeah, you too. All right, now still staying in the market, we're still waiting those visuals. Anita is right now at the trading floor in Marina and capturing the moments right there. I learned that Richard Mufedamijo, the actor, rang the closing bell. We'll show that to you, so it's not just, you don't take our words for it, but we'll wait for those visuals. While waiting, let's head to Europe, find out how that market has been faring while we're celebrating the market in Nigeria. Let's see how that market has been overall. European stocks, I learned, have enjoyed a positive year this year. But Wada Imran joins us from Berlin now to give us the details. Hi, Wada, good afternoon.
Thanks for having me on the show, Ini. Europe's best performing stocks were from two industries, the chip-making semiconductor industry, and this is in relation to the rapid rise and popularity of artificial intelligence and its technological demands. The second is pharmaceutical, so weight loss drugs like Danish company Novo Nordisk's Ozempic. I'm sure you've heard about Ozempic, which is a medicine for type 2 diabetes. But it caused a global frenzy this year as users reported quick weight shedding after using the medicine. The pharmaceutical company behind Ozempic saw a 49% gain for its shares this year, and that pushed the company to become the biggest European firm by market value. The company even surpassed the LVMH company, which owns Sephora, Dior, and most of the other popular luxury items here. Chip makers BE Semiconductor Industries and ASM International saw their shares double and were generally viewed as the winners of the AI craze here.
So, do we expect this trend to continue next year?
Well, with AI growing so rapidly, it seems that chip-making companies will continue to grow next year. Now, something that comes to mind as Europe races to establish itself as a big chip-making hub is the fact that ultimately players here will have to navigate through the trade war exploding between US and China. But overall, I think companies like BSC Semiconductor Industries will see more gains in 2024. But competition is on the rise as even Ozempic makers Novo Nordisk, now worth $452 billion, face more fierce competition in the pharma industry. So I'm quite interested to see how 2024 pans out.
At 2024, what are investors looking at today?
Well, on the final trading day of the year, activity is slow. It feels like everyone is ready for the holidays. Some markets like South Korea and Thailand are already closed for the year. But In news, European equities edged higher. Global shares seem to be giving their best performance since 2019. An interesting observation is of retail stocks in Europe. 2022 was not a good year for retail here, but this year has been largely better. The company that owns the popular Zara stores showed gains. But there's also growing concern that slowed global growth may impact consumer spending next year. And that's all from here in Berlin.
Thank you so much, Wada, for that. And I'd like to have the closing gong now.
Wedding anniversary. So here today. So that's all I was saying. Thank you on behalf of the family. It's really great to be here and see the work you guys do, and hopefully we do things together in the future. So thank you.
I know that, we've got a lot of TV cameras here, but some of the companies that, and this is public information, that she, is associated with, things like Flutterway, that she has strong influence on us. So when I was speaking earlier, you will understand why I was saying that, and probably also a lot of technology companies also sort of piggyvest is another. So please, maybe we can give her a bigger round of applause. Someday in the not too distant future. So, as we bring the trading for 2023 to a close, I'd just like to ask our MVPs to hold the comment and ask me to stand beside me for some of that. And we'll just count on and clap too. That's fantastically done. Please, another round of applause.
And the NGX is closed for 2023. See you at the markets in 2024. All right, now let's move to other market. Now the United States stock futures were edged higher on Friday as Wall Street looks to end a winning year on a high note and possibly a new milestone. Let's look at the details of that. The Dow Jones in the green, marginally 0.404%. S&P also marginally up 0.05%, but at 4,834.75. Nasdaq looking even better, 0.12% at 17,110.50. It enters the final day of trading at 0.5% and its exclamation point on a rally that gained on the final month. The story right there for positive again for the U.S. market. Moving to to Asia now, Pacific markets fell on the last trading day. Unfortunately, that's on the flip side, with China's stocks being the sole exception as the country's tech companies continued their advance. Chinese consumer electronics company Xiaomi on Thursday detailed plans to enter China's oversaturated electric vehicle motor. Let's look at the numbers right there. The Nikkei in the red, 0.22% at 33,464.17. Kospi looking good at 1.60%. Hang Seng Index marginally up 0.02%. Shanghai also up, while in Australia it's a negative for the market, 0.31%. at the close of trade. In the global oil space now, prices are set to end 2023 about 10% lower, the first annual decline in 2 years after geopolitical concerns, production cuts, and global measures to rein in inflation triggered wild fluctuations in prices. Brent crude futures were up 18 cents, that's about 0.2%. at $77.33 a barrel, the last trading day of 2023, while the U.S. West Texas Intermediate crude futures were trading at 11 cents higher at $71.88 a barrel in early Asian trade. At these levels, both benchmarks are on track to close at the lowest year-end levels since 2020, when the pandemic battered demand and sent prices nosediving. Oil is also on track to fall for the third straight month because of demand concerns outweighing the risks of supply from the Middle East conflict, as well as production cuts by OPEC+. You're welcome back. Still watching Business Incorporated right here on Channels Television, the final one for 2023. Now, let's just take a little bit of some steps backward and look at Nigeria, Kenya, and Egypt's the economic policies that they have implemented. And you know, being an African country, there's a common thread running through. Fuel subsidy removal was a major one for these countries. Of course, tax increases have also affected the people. But let's talk now to the Chief Executive Officer and founder of Bay Projects, Mr. Segun Adegoke, joins us in the studio now to look at the welfare of these countries after these policies. Mr. Adegoke, thanks so much for your time and compliments of the season.
Thank you very much for having me.
Yeah, so we've seen the IMF and the World Bank applaud subsidy removal and, you know, some of those, and even ask that tax be increased, both the tax net and the tax itself. But from your eyes, what have you seen since the removal of this subsidy? In Nigeria, we know that government revenue has increased by about 200%.
That's true.
Unfortunately, the poor has also increased. You know, not a balanced picture we see there.
Well, we're quite unfortunate that this is happening, but I think we need to just find a way to just pound through. I mean, it's not just limited to Africa. You know, it's happening as it's a global threat now. You know, there are a lot of policies being actually, you know, implemented, and we can't say that the government is actually not doing enough yet. Especially, let's narrow it down to Nigeria. I think there are a lot of, you know, relief the government is actually trying to actually put together to actually make the life easy for people. But by the time we take it to real estate, I think it actually has also further reduced the affordability ratio, because if people are still struggling to eat 3 square meals a day, I think it's quite going to be a very difficult one to start looking at, you know, real estate purchase or investment. So it's quite unfortunate, but then the government just came in, and I think that, you know, the IMF itself also have a good projection for the coming year, hoping that, you know, we concluded around 2.7 to about 3% Q4 2023. And we're looking forward to, I mean, according to IMF, that things can actually get better. I mean, the GDP can actually get better by up to about 3.3% looking in 2024. So let's be optimistic. And also, let's see how best this can actually, you know, take us.
So if you want to compare the real estate activities in the real estate sector in 2023 and that of 2022, is it better?
Well, it is what it is, actually. So, but 2023 was a bit difficult because of the government change of hands, obviously. And like you also said, because of the new policies we have. But one thing for sure is that, I mean, statistics already shows that most people that buy into real estate in Nigeria basically are looking into housing is actually much of the diaspora people. So, you know, they're having issues with confidence in the real estate sector right now. But like I said, with the new policies, it's quite expected. But we're looking at a very better one in 2024. 2022, 2023.
When you say better, what do you see? More people, more diasporas buying houses, more of the residents?
Okay, so if you look at the real estate sector now, the millennials are actually, I mean, people born in 81 to 96 now, are also ripe for real estate investment now. If you look at that, that's a chunk, a lot of people in that age gap. So with those people now trying to, I mean, they've gone beyond going to school, then trying to struggle with employment. So most of them are really looking into, the report in 2023 shows that, I mean, a higher percentage of people that bought into real estate are actually millennials. So that means that we're having optimism towards 2024. That's number one. Secondly, also, the government, like I said, just came in. We're hoping that in the coming year, they're already more stable than what it is now. And also, the IMF also has its prediction. So we're very confident that 2024 will be better. Obviously. Yeah,
but the millennials are they coming into real estate for investment as a business or for residence purposes?
Okay, so, I mean, that's now actually central on individuals. But, you know, so a lot of people want to make money, but then people also want to own a home on their
Obviously, it's one of the basic needs of life. But thank you so much.
Thank you very much.
Mr. Segun Adegoke, the Chief Executive Officer and founder of Bay Projects.
Thank you very much,
for your time.
Thank you.
See you in 2024.
I see you in 2024. Happy New Year in advance.
All right, just before we go, let's tell you that coming to Nigeria, staying in Nigeria, I should say, The National Bureau of Statistics has released select food price watch for November. The reports indicate that average price of 1 kilogram of boneless beef increased by 29.61% from 2,337 naira 46 kobo recorded in November 2022 to 3,029 naira 50 kobo in November 2023. The average price of 1 kg of local rice was up 73.16% on a year-on-year basis from 500 naira 80 kobo in November 2022 to 867 naira 18 kobo in November 2023. On a month-on-month basis, the price of 1 kilogram of local rice increased by 5.83% from 819 naira 42 kobo recorded in October 2023 to 867 naira 18 kobo recorded in November. I'm sure you have the reality, you have the picture even closer to you, talking about price of staple food or food ingredients. Still staying in Nigeria, it's good news as the federal government has approved a 0% value-added tax waiver on feed gas for all processed compressed natural gas, that's CNG, and imported liquefied petroleum gas with immediate effect. The VAT-free waiver also extends CNG component, conversion and installation services, liquefied petroleum gas equipment component, conversion and installation services, and all equipment and infrastructure related to the expansion of CNG, LPG. And the presidential initiative includes a conversion kit. So we should be able to convert our cars and our generators to CNG at a cheaper price in 2024. That's what we hope for. Still in Nigeria, the Central Bank of Nigeria has revealed that the volume of e-naira in circulation has increased by 284.6% to 9.78 billion naira. The Apex disclosed this in the recently published economic report for August 2023. Since CBN noted that the volume of e-naira in circulation is still insignificant compared to coins and notes in circulation. Now let's leave Nigeria and go to Kenya, where, well, it's a mild good news. Kenyan consumer prices rose at the slowest pace in almost 2 years in December. That's days after the central bank announced the most aggressive interest rate hike in more than a decade, all in a bid to the consumer price index increased by 6.6% from a year earlier, compared with 6.8% in November. In Ghana, the Ghana Revenue Authority is set to implement 10% withholding tax on winnings from all lotteries from January 2024 after a 5-month delay. The authority has mandated the NLA and the PLOs to begin the implementation of 10% withholding tax from the very first day of January 2024. That's on Monday. The GRA emphasized that compliance with the tax law is mandatory, and failure to do so is considered an offense under Section 78 of the Revenue Administration Act 2016. That's it on Business Incorporated, a full year of it. Thank you so much. Really appreciate your time and your attention. Let's do it again in 2024. We promise to do it better. I'm Ini John Mekwa. Have a great holiday.